What's going on, guys? Good morning. Welcome back to another pre-market live stream here with the Everyday Growth Advisors. Hope you are having a good morning or evening. Happy weekend. And I hope that you guys have not been having too much of a rough time. I have been very, very busy in my personal life and also just taking care of, a big event that is about to happen. So I have been a little, less focusing on my trading journey so far in the past 1 week. Obviously, you guys know I tell you guys every single thing that happens in my life, and I just want to keep you guys updated because the thing is I am moving apartments currently, and at the same time I'm going to be going to travel for about 3 months. I'm going to be starting with leaving Singapore and going to Indonesia for about 3 weeks for a short trip with my family, and then after that I will be heading to Bangkok for a little while. After that, I'm going to be going to Lisbon for a 7-day blackout period where I will be attending a festival, and then I will be in America for the next 2 months after that. So there's going to be a lot of traveling for me on the books in the future. So if I am not doing these live streams regularly, please forgive me in advance. I will, however, always put out my thoughts on the Discord. I will always put out my thoughts on Instagram and make sure that you guys know what I think about the current situation that's developing in front of us. Now, just kind of following on from what we've been talking about for almost a few months now at this point, we have been following, and I've been telling you guys that this moment when the S&P 500 bounced very, very long ago back in March was a opportunistic moment to get in long, and since then we have done nothing but just pretty much go up, right? And even so, after last week's newsletter, I think a lot of people were still very bearish, and they were hoping for this megaphone pattern to kind of break down and come back down. But today, we stand for almost pretty much as a magnet point at 4,200, and the macro situation hasn't quite changed just yet, right? So if we were to play on multiple horses here and just kind of look at the market as a whole, you would realize that there is only a few scenarios here. The bullish scenario is if we say that the Fed rate hikes are over, the market is pricing in robust growth in the economy, which it has already successfully priced in a recession, and then at the same time is pricing in a potential recovery from the recession at this point, 6 to 8 months down the line, because obviously we are already in a recession, and we are starting to price the recovery period of a recession right now. And this is why you have to always remember that the stock market is not the economy, and the economy is not the stock market. I mentioned this so many times, and you guys have to get used to this, right? So we just crossed barely over the key pivot for bulls. 4180 was the key pivot for bulls, and last week we managed to secure over that level, and we are currently trading above it. But remember that we can easily squeeze back down in below this 4180 level, even if this daily candlestick closed above it. Remember that this market can be really finicky. So what causes the little bit of irrationality or the whipsaws back and forth, and how are you going to take advantage of this? Well, the bearish scenario, so I just told you the bullish scenario, but the bearish scenario is if the market starts to price in some kind of a rate hike, right? A potential continuation of rate hikes, and also the fact that inflation is not done being taken care of, right? Remember, with tight labor markets, it's going to continue to rage on, because that increases the spending power of consumers, and that circle always causes increased prices, right? We need people to lose their jobs in some way. I know it sounds terrible, but that's just the way the economy works. People have to lose jobs, and the economy has to be a little bit worse in order for inflation to come down. That means the economy has to cool down. The labor markets have to cool down. And we're not quite seeing that just yet, which is what the Fed is going to be focused on. So that gives the potential opportunity for the Fed to continue hiking rates. That's the bearish scenario, right? Not to mention that there are still continued aftershocks from banks, and we continue to see weakness in the financial sector in general, right? As you can see from XLF, which has been kind of just trending sideways, right? So there's definitely things on both sides to argue and to kind of talk about, but for the most part, our prediction from weeks ago of this market moving higher has actually played out pretty nicely, right? Has played out pretty nicely, and I think our prediction of us getting into the 4,200, 4,300 is pretty possible at this point, right? If we can get that continued momentum and volatility in this market. But however, I do think that we will see continued pullbacks like this, and it's going to continue to see a lot of market maker manipulation as we have seen last week. So after very strong consecutive days of rallies, we've seen some sell-offs, and so today I wouldn't be surprised if, before we actually get up into this zone up here, we do see some other pullbacks and some more trapping in order to free up some liquidity. Now, something that you guys need to understand, what was the reason for this rally last week, right? And this rally last week, the week before, and this rally here, right? Well, you have to understand that there are a lot of players in the market that have been underexposed. In fact, hedge funds have been very aggressively short. And then you have Sharpies, which are the smaller spec investors. They have been also pretty short. Retail sector has been extremely short and bearish. I'm not really sure if a lot of people can feel bearish in this kind of a market, because they always are constantly fearing that there's going to be a rug pull, right? And I'm pretty sure that's on a lot of your minds, right? This is one of the reasons why I haven't been trading much as well. I've just been kind of playing it lightly. In fact, this past week, I saw my portfolio just kind of go up and down. Just I'll show you guys right now. It was a very big whipsaw. I saw a huge string of losses, almost $10,000. Wait, more than $10,000 actually. It was at some point of time almost $14,000. I managed to claw back some of it and end the week green at $435 for the week. I managed to claw back about $14,000. And this has been just a very, very tough situation to trade, and that's okay. You have to recognize that that is okay. The market is not always going to present you the best opportunities to trade, and during times like this, you have to kind of take a breather, step back, reassess, and let the market and the trades come to you rather than you chasing them and hoping and wondering what is going on and scratching your head and telling yourself, oh man, I really don't know what's going on here. So you don't want to do that, right? So in that case, you have to always take things from a risk to reward ratio standpoint, and that's the best way to trade. So right now, where we are in terms of the S&P 500, jumping into the technicals a little bit here, you can see that this is a clear pivot point, right? This was a clear support prior, became a resistance again. This area down here also became a resistance, another resistance, major resistance. We want this now to form a support. This 4180 all the way down to 4150, I want to say actually, 4150, 4180, this area here, we want this to become a support. We want this to be a launch pad for us to pull back into and then find a upward impulsive wave again. And that's going to be a very important part of the next move in this market. If we are unable to find that, then it's likely that we will go down further to get some more liquidity in order to orchestrate that move. So you have to be aware of what is going on here. Now, this chart is completely different on the NASDAQ, as you can see. Now, why is this so? Because mega caps have been leading this rally, right? And we spoke about this multiple times now, that NASDAQ has been the leading sector. It's been almost 2 months I've been telling you guys that NASDAQ is the leading sector. And still, obviously, a lot of people have been trying to take trades in other sectors, and that's fine, right? But you need to understand that because NASDAQ has been the leading sector, it has broken out sooner. And that doesn't mean that NASDAQ is going to for sure pull back, and it doesn't mean that NASDAQ is going to for sure continue rallying. So the only way you're going to know what's about to happen here is when you wait for the pullback and you see where it establishes new demand, which we are hoping will become 13,555 roughly, right? Because this is the previous level of resistance. This is the previous level of where we've seen a lot of action in this area, and so we want this area now between this 13.2 to 13.5 become a strong bounce level, just like SPX after this breakout, right? And then we can establish, okay, demand is now higher, and we could even ultimately get a pullback that is as deep as, I want to say, around here, right? Potentially 12,860. So if the market gets super exuberant on some news, then that could happen, right? Maybe debt ceiling, I don't know, so all the bullshit headlines that they're trying to spark fear with, right? But as of right now, this breakout is very strong. We're going to ride the momentum, but we want some kind of a pullback to add long positions. That is the idea, right? So you have to be aware that this market is absolutely bonkers right now. And yes, it is tough. It's not just tough for you, it's tough for everybody, okay? And the zero-day dynamics of market makers makes it even more difficult because they weaponize the gamma intraday to create squeezes, to create rug pulls, to create all the other kinds of moves that you're not really suspecting, right? And so you need to understand that the dynamics in the market have changed. This is not a 2020, 2021 market. This is not a 2018 market. The market is a new breed of animal, okay? We are not just dealing with bulls and bears anymore. There are wolves everywhere, and you need to be aware of that, okay? Next up, let's talk about IWM. Still stuck in the range. It has now broken out of 180. And has now broken down below 169. It briefly tried to do that on at the beginning of May, but it never got there, and it bounced pretty strongly. We have continued to see some decent IWM exposure being taken for the upside, but I'll give you guys more updates when I see more flow on this. As of right now, not much interest in this at all, so I can't really give you guys much direction here. Now, yes, last week's energy play on the newsletter I posted, which, by the way, if you guys are wondering what the newsletter is, it's just a bit delayed because I'm waiting for some data to come out. I don't want to send a newsletter without the data that I'm looking for, because otherwise it's just a pointless newsletter. I think many of you that know me by now, you know that I don't do things for no reason. If I do it, I make sure it's intentional. I make sure that there's a use for it for the people who are using the material. Otherwise, I don't do it. Like, I will never hold a live stream without there being a purpose for the live stream, because I just find that a waste of everybody's time, and I hate wasting your time and my time. So let's not do that, right? So I haven't sent the newsletter out because I'm waiting for data. But last week on the newsletter, I did write about XLE and a potential bounce play here at the 78.35. Now, we didn't exactly come down to the $75 level to bounce, which was the level at which we were really hoping for. But we did kind of squeeze back above this long-term trend, which we have been looking at, which is actually kind of interesting, right? You can see this long-term trend on the weekly chart on XLE. And so we want to see if we can have a weekly close above this level here, or if XLE can find some nice, sexy legs on any one of these with a bullish momentum candlestick. So far, we don't have a reversal pattern just yet. So this is a cautious sector that I'm not going to be trading just yet. But I will look if I can get above 80.25 or anything like that. That will kind of pique my interest if I can get that going, and that will be interesting. The other sector that hedge funds are long is healthcare. Okay, this is a sector that's been bought up. So according to Prime Book data, for the last week, we've been seeing positioning started long in healthcare and short in financials. Okay, this is just for your FYI. And once again, I'm going to reiterate and lay a very important caveat. We do not follow what hedge funds do, because they are the ones that get eaten the most often in this entire cog system, right? They are kind of like the small little fish that is swimming around, but we want to be following sharks, right? So do not fall for the hedge fund trap. We will not be taking the trades underbelly from them. We want to look for bigger spec players who are, trading under the belly, and we want to be focusing on those. Now, from last week, I highlighted two sectors that are at the breakout mode. The first one is consumer discretionary, XLY. This, if it can get above 154 and ultimately above 158, we could see a very nice push up in consumer discretionary. Now, what stocks that should you focus on if XLY starts to rally out of control? Amazon is one of them, right? Which has been seeing nice little momentum here, right? And the other one, Tesla, right? Tesla, which I have been pointing out to you guys for about 2 weeks now, that we have ever since we bounced on this very key level at the 23.6 and 38.2 Fibonacci's, respectively. We have been seeing a very nice strong bounce. Now, the whole of last week, we've continued to see exposure on options, unusual options flow being taken for 180, for 190, for 200, and they've been buying July, they've been buying September, they've been buying even October calls, all on Tesla. Okay, So there is obviously a move that is about to happen here, and you cannot say it with 100% certainty, but what you can say is that there is some significant interest peaking in this specific ticker or in this specific sector, okay? And so with the consumer discretionary, you want to keep your eye on that sector because this is a sector that has broken out and is looking pretty nice. A pullback would be a decent entry. Remember, rug pulls are going to happen. You have to take that in your stride and be ready to load some of these positions to the upside, right? Obviously, a different scenario altogether if we break back down here and then start rejecting and keep going down, 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 right? Then obviously your trade thesis is off, right? The other sector is XLC, communications. Inverse head and shoulder pattern with a very beautiful breakout as of last week, and continues to see some decent momentum on the close of Thursday, and Friday saw a very minor pullback, okay? So this is another sector above $63 looks very bullish. What are the top two stocks to look for in communication sector? Obviously one of them is Meta, right? And this one has a huge gap fill all the way up into the 317. Obviously it doesn't mean that it's going to go up there immediately. Remember, get that out of your head, right? Immediately remove your bias, right? This is not going to move like this and then go, oh, right? Like how many of you are thinking. It could, obviously, but will it is a different question, okay? You have to be very careful with the way that you think about things, okay? The other is Google, right? Google is from communication sector as well. This also has seen significant rally, and then on Friday we saw close with a kind of a pin bar. So today's session will kind of let us know if Google's actually trying to press higher, or is it going to kind of press higher, fake out, and then reject and move back down into 119 support, which is going to be the key support here because this has been past resistance multiple times, and this is going to become a potential support here, right? So these are all key things that I'm watching for this week. And if you guys have any questions, post them in the chat right now. Also, I appreciate you guys being patient with me and attending the live stream. Make sure you smash the like button if you can. That's the only thing I ask for. And yeah, if you have questions, post them here. Just so you guys know, a couple of announcements. In the end of June, we'll be holding a webinar for unusual options. How do you read them and things that you should know about unusual options activity. So that's in the pipeline, which is going to come next month at the end of the month. I'm thinking to hold it pretty much in June on the 24th or 25th. So more details will be posted on the Instagram closer to the date, but I'm really excited about that one. I think that you guys are really going to enjoy it. And so, yeah, I can't wait to do that webinar for you guys. Okay, TSM. Let's have a look. Considering China just banned NU. Okay. Let's see. Yeah, this one has been seeing some very interesting activity. So similar price action to like Tesla actually. Has been really has been really interesting in the past couple of weeks, I would say, on this one. It formed a nice base above the resistance of the previous high here at 82. Found some demand there, and then the past week has been a rocket, right? A little bit of increased volume buying. You have to be aware that this is a supply zone right here, so you're entering a supply zone. I would be cautious trading in the zone. I wouldn't want to trade in the zone. So either you wait for the breakout above 96-ish, 96 something, or to be really safe, you wait till it breaks above 98, right? 99. But I don't think you want to trade the upside here. So maybe you want to wait for a pullback first, establish higher demand. So, you could be looking at a bunch of different scenarios here. The first scenario could be breakout, come back, retest, and then further higher. Second scenario could be reject, come back from a lower high, right, like this, and then breakout. That could be another scenario, right? So it's all going to depend on what direction this wants to take here. I personally feel the risk-reward ratio here is no bueno for the upside. And then the risk-reward ratio to the downside is no bueno neither. Like you can go downside, but it's you have to keep very tight risk off, which doesn't make the trade feasible. Like you would have to go risk off around $96, right? And if you take the short position, and your short's going to give you about a $10 move, you're looking at pretty much, let's say about $4. Yeah, you could squeeze out a 1 to 2 bearish play here. but you can't squeeze out a 1:2 upside play here. So I think the downside is better in terms of planning. Wait for the rejection, take the downside scenario rather than take the upside scenario here. Just from my perspective, I think that makes a lot more sense. And then you have all the rest of the market that is also in that kind of overbought scenario. So it might pressure the market further down. And anyway, this is NYSE and semiconductors. So yeah, that would be what I would say. How do you anticipate SPY is going to move? I actually mentioned this already, and I would highly recommend that you read the newsletter from this week. I will be sending the newsletter out by today. Actually, not today. Probably by tomorrow. In other words, in the next 12 hours or so. But yeah, you want to be waiting for this pullback here once we break out. If we're going to get a pullback, see how SPY is going to behave in this 416? Yeah, 416 to 417, 418. 416 to 418, it needs to bounce somewhere there. If it doesn't bounce and it breaks through this level, then there's likely to be some further pain down all the way down into 409 for a broader retracement here before the next wave kicks off to the upside. Based on the previous close on the two candlesticks on Wednesday and Thursday, I think momentum is likely to continue if we can hold this level here. So that's my take on SPY. Remember, we always use SPX as the more important thing to look at because it's traded between all the different time frames. So yeah, I hope that's helpful for you, Fateh. Any other questions? Any other concerns, comments, or anything like that? Yeah, no problem. Of course. So remember, it's a Monday, and we're getting close to the market weighing in on FOMC again. Remember that FOMC is going to be again next month. Not to mention, JP Morgan's collar will be expiring again in the next week. Sorry, by the end of this week, actually. No. By next week, right? And they have a collar at 41.90, so which is exactly where we're at right now, just so you know. So they're kind of incentivized to keep the price below this. This is where their short call is. It's not a big size though. This is the smaller size collar they have actually, and they could roll that position. So obviously it doesn't play a big role, but yeah, you got to be aware of it. May is typically a seasonally weak month for the S&P 500, and FOMC is going to meet in June on the 13th and 14th. So the market's going to start to price in this action. We're about a month away, but as you can tell, we're going to start to price in this action in the next 2 weeks. So be aware of that. FOMC will meet in the middle of June, right? Yeah, that's all I have for you guys for today. I hope that you have a good trading session. Don't over allocate risk. Always remember, risk management is the name of the game. And yeah, keep it light and trade well. I'll see you guys on the Discord trading floor. If you want to join us on the Discord trading floor, you can. We offer 14 days free trial. You can obviously join us and see what's up. If it's a fit for you, stay. If it's not a fit for you, then no harm, no foul, right? So I'll see you guys on the trading floor, and take care. Peace out. Bye bye.